Alright, let's dive into something that's been buzzing in the crypto space lately, Bitwise's bold prediction that Bitcoin could hit a staggering $1.3 million by 2035. Now, before you roll your eyes and think, here we go again with another moonshot prediction, let me tell you why this one is different, and why it's worth paying attention to. Personally, I think what makes this really interesting is that it's not just about retail investors or speculative hype. This time, it's about institutional money, the big leagues. And that changes everything. Here's the deal, Bitwise Chief Investment Officer Matt Hougan is betting on institutions like pension funds, endowments, and even sovereign wealth funds to start allocating a tiny fraction of their portfolios to Bitcoin. We're talking about 1% of their assets. Sounds small, right? But here's the kicker, these institutions control somewhere between $100 trillion and $200 trillion globally. Even a 1% allocation could send Bitcoin's price into the stratosphere. What many people don't realize is that this isn't just a theoretical scenario, it's already starting to happen. Spot Bitcoin ETFs are making it easier for these big players to get in the game, and firms like Morgan Stanley and Wells Fargo are already paving the way. Now, let's take a step back and think about this. Bitcoin has always been seen as a retail-driven asset, right? But if institutions start pouring in, it's not just about the money, it's about legitimacy. In my opinion, this could be the moment Bitcoin truly transitions from a speculative asset to a mainstream financial instrument. And that's a game changer. It's like when gold ETFs launched in 2004 and gold's market cap exploded from $2 trillion to $30 trillion today. Hougan's prediction is essentially saying Bitcoin could follow a similar path, but on steroids. One thing that immediately stands out is Hougan's comparison of Bitcoin to gold. He's not just saying Bitcoin will compete with gold, he's saying it could take a 25% share of the entire store value market. If you do the math, that's where the $1.3 million price target comes from. But here's where it gets fascinating, this isn't just about Bitcoin replacing gold. It's about the entire store value market expanding, and Bitcoin carving out its own space. What this really suggests is that Bitcoin isn't just a digital version of gold, it's something entirely new. Now, let's talk about the elephant in the room, corporate buyers like MicroStrategy. For years, they've been the poster child for institutional Bitcoin adoption. But Hougan believes their role is diminishing. Why? Because the easy paths to accumulation are gone. Spot ETFs offer a simpler, more direct way to invest in Bitcoin, and MicroStrategy's debt-fueled buying spree has hit its limits. From my perspective, this is a sign of maturity in the market. Bitcoin is moving beyond relying on a single corporate entity to drive demand. What makes this really interesting is the shift in focus from short-term price movements to long-term fundamentals. Hougan says the question isn't whether Bitcoin has found a local bottom, it's whether the top is in. And that's a profound shift in mindset. It's about seeing Bitcoin as a multi-decade investment, not a get-rich-quick scheme. If you take a step back and think about it, this is exactly what the crypto space needs, less speculation, more institutional stability. But here's the thing, this isn't going to happen overnight. Hougan himself admits it's a 10-year process. And that's where the real challenge lies. Can Bitcoin maintain its narrative as a store of value for that long? Will institutions stay committed, even if the price fluctuates wildly? These are the questions that keep me up at night. Because if Bitcoin can pull this off, it's not just a $1.3 million price target, it's a complete transformation of the financial system. So, where does this leave us? Personally, I think this prediction is less about the exact number and more about the direction Bitcoin is heading. It's a vote of confidence from someone who's deeply connected to institutional investors. And if there's one thing I've learned in this space, it's that when the big money starts paying attention, it's time to take notice. This raises a deeper question, are we ready for a world where Bitcoin is no longer the underdog, but the mainstream player? Let me know what you think in the comments below, because this conversation is just getting started.